Welcome back to another episode of Money and Medicine. If this is the very first episode that you are joining, we hope you enjoy it. We hope you find it useful. We also want to encourage you to go to the bottom of this page, subscribe, share the content with some of your colleagues and friends who you also think might find this useful. And please go check out our website on www.moneyandmedicine.co.za, where we've got panels where we discuss certain topics with certain product providers, in terms of certain cover, certain benefits, certain investment vehicles, and we do know and trust that you will find it useful. So welcome. Well, on this episode, we are going to talk a little bit about tax returns, some of the common questions that we do get on tax returns. Werner, before we get there, what does it mean to submit your tax to SARS every year?
So, Stefan, we are currently right in the middle of the current tax season. And I think the very first step for anybody that wants to submit a tax return is they have to open an e-filing account. So they have to register for e-filing on the e-filing website to get a profile with them.
Yes, we've also we've helped some of our clients work through that process where they typically need your FICA documentation, where they ask for like a copy of ID, proof of banking details. Yes. I know also a photo with yourself holding up your ID. So that type of information in order to open up your e-filing, where you will then be furnished with a username as well as a password in order to enter your e-filing profile. Okay, so once you've opened up your e-filing profile, what sort of supporting documentation, certificates do you need in order to submit your physical tax return?
So there's a number of documents that you will have to submit. It depends on your personal circumstances. So one of those documents that is applicable to every person would be an IRP-5 if you are salaried employed by a company, as an example, or the Department of Health. That IRP-5 will have to be submitted, and then there's certain tax certificates, such as a tax certificate that has been issued by from your retirement annuity by an investment platform. Also, if you are contributing to a medical aid, there will be a medical aid tax certificate. I think those are the most popular tax certificates being submitted currently.
Yes. And so let's quickly talk about an IRP-5, because I know that's a document that everybody wants to know more about. What does it mean? What is it? In layman terms, I would say an IRP-5 document is if you've been employed by a company or even by a person, somebody that paid you a salary and that assisted and facilitated your tax or your pay-as-you-earn tax, that person needs to furnish you with an IRP-5 document for that specific tax year. So an IRP-5 is basically a summary of your earnings and tax deducted by that person for that financial year.
For that specific year. So I think it will set out all of the remuneration that you've earned in that year.
100%.
It would be a fixed income. Any overtime would be on there. So you're 100% correct. It will technically be a summary of all the income that you've earned from that specific employer for that year.
Yes. So I guess the next question alludes to the fact, where do you get an IRP-5 statement?
So there's a number of places that you can get it. You can ask your employer for a copy of your IRP-5. They
Typically
would normally,
the HR department.
Your HR department. Yes. They would normally give you a hard copy or a soft copy that will be emailed to you. But we also know that from a lot of these people are struggling to get an IRP-5 from their employer. It's not always as easy to go to the HR department and just get a copy. So if you can't find a physical copy from the HR, I would say another way to go is onto your e-filing, because technically what they have to do is, prior to the tax year opening, your employer have to upload your IRP-5 onto the system. So you can log into e-filing and see if your IRP-5 is uploaded on there.
Yes. The IRP-5 that they normally upload on e-filing is editable. So you can, obviously then, if you've got your physical IRP-5 that you got from your employer, you can then correspond with whatever they've uploaded online. So it is important for those two to correspond and correlate. And what can happen is once you've submitted, SARS can actually audit you and ask for the physical IRP-5. So I do agree, it is a way to look at your e-filing is a way. But it is very important for the listeners out there to try and get your IRP-5 from your HR department as soon as you possibly can.
Yeah, and I would also recommend, even if you find the IRP-5 on the e-filing system, just cross-reference it with the physical one to make sure that there's no mistakes, because we have seen in the past there is certain mistakes that has slipped in, where somebody has paid more tax than what they should have, or paid less tax than what they should have. So just have a look at that all of the details are correct when you verify it.
Yeah. So what happens after you've now submitted your tax returns? What is the process then from there?
There's one of two outcomes. The most favorable outcome, I think, that everybody is hoping for is to get a refund. So everyone wants to get a refund. And when you get a refund, the refund will technically show that you have paid a little bit more tax than what you should have paid, or you can claim back certain of the contributions that you've paid on an investment or medical aids. So that's the most favorable one, is to get a refund. The flip side of that is where you have to pay money to SARS, where you have paid too little tax on your income.
We don't see that quite often in a space where somebody is employed. Because normally the employer is quite, they're quite accurate with the way they determine the tax that they pay on a monthly basis. So I do agree we more often than not see the rebate situation. And I think also very important to note for those of you that are in your first year internship or going into your first year internship, when SARS determines, or when you are taxed, you're normally taxed on a financial year, which starts on the 1st of March and ends at the last day of February. It's not like a calendar year that starts on the first day of January and ends on the last day of December. So what happens is, if you start in January being employed, you still form part of that previous financial year, because that financial year only ends at the end of February. But you pay tax on tables as if you've paid for the full year, which means that effectively you only earned, let's say, X amount for that year, because you were only employed for January and February, but you pay tax as if you were employed for that whole financial year, which means that you are a big rebate due in your first year as a medical intern. So it's very important to try and get this process wrapped up as soon as possible. Tax season normally opens up in July, I would say. Normally July. When tax season is open, to get your documentation ready, to know what you need to have in order to get that nice rebate in your first year internship. I think the big question is, a lot of people assume that in their second year and in their ComServe and going on in a medical officer, that they're going to get that rebate again.
Correct. And this is actually brings me to the next question. Is a lot of people ask us in their second year of internship, as an example, or a couple of years down the line, once they've been employed for a number of years, why aren't I getting anything back from my taxes? Because I think that first year rebate that you receive as a first year intern, where you have paid too much tax on the income earned for January and February, creates a misconception, where I think that automatically now they are due to get another big refund in the second year of internship. And that is purely a misconception being created by default from the first year.
And I think one of the most common questions I get is a client saying, Stefan, one of my colleagues got back X, I didn't get back anything. Or I've been referred to you because your clients get something back, but I didn't get anything back. Why is that? So what is easy tips just off the bat that people can do in order to get that rebate annually?
Stefan, I think the one thing that everybody needs to understand, and where they should start, is in which they actually need to be careful of, is to just submit an automated return.
Yes.
Because remember, SARS does not know what contributions you've made during that specific financial year. They don't have all the information regarding your finance.
So just on that note, what is an automated return? So an automated return is something that SARS introduced in 2020, 2019. Okay.
So an automated return would be normally where you will log into efiling, you would pull your IRP5, and you would just submit your tax return without uploading any tax certificates or anything like that. Okay. And although it's a great thing, it's a great system, I think it takes a lot of admin away from SARS for people that's just got a simple tax return.
Yes.
But you must be very careful for that, because you need to take into account that SARS does not have all of your financial information. They've got very limited information. They don't know how much you are contributing to a retirement annuity every month. They don't know what your out-of-pocket medical expenses are, for an example. Yeah. They don't know if you are earning an income from a rental property, as an example, and what deductions you can take from that rental property. They don't know, have you done any locum work during that specific year? And do you have expenses that you are claiming back for that locum work that you have done? So all of those things needs to be taken into account, because with all of those factors, you are due for certain deductions that you can claim back from SARS, which actually reduces your tax liability. And I think this brings us back to the question why some of the medical professionals out there are getting back a bigger rebate in their second, third, fourth, or fifth year of working compared to others, because they, in all likelihood, have submitted certain documents, or they are contributing more to a specific vehicle, which other individuals are not doing. So there's no clean-cut formula where we'd say, listen, you are getting back X amount in this specific year of your career.
Yeah. The golden question: what can someone do listening to this channel in order to get a better rebate in the next year of assessment?
So there's a number of ways. I think the way that you will get back a return in the easiest way, or the best way to determine how much you would get back, is by way of contributing to a retirement annuity.
Yes.
We've done a podcast and we've done an episode on the benefits of a retirement annuity and the tax benefits of contributing to a retirement annuity. And I would encourage you to have a look at and listen to that specific podcast where we talk about the benefits of having a retirement annuity.
It's at the link below.
Yeah, so I would recommend consider sitting down with a financial advisor, see what a benefit would be to you if you start contributing to a retirement annuity, and what that tax rebate would be in the next financial year. The other way is to start contributing to a medical aid if you are not yet contributing to a medical aid. It's a little bit more complicated and not as simple to determine the refund that you will be due on a retirement annuity. But with a medical aid, there's also certain deductions, such as out-of-pocket medical expenses, that you can claim back.
And it's more of a tax credit. So, yeah, great. I think also something that's important to mention, I don't know if that's too much to do if it's got too much to do in the medical field, but some of the other listeners in other sectors is also welcome to talk to a tax consultant or to talk to your financial advisor about the new working from home, obviously due to lockdown regulation and due to, the COVID situation that's going on. It starts also allowed for office deductions if you're working from home in certain instances. So that's very important. And I think then lastly, if you are in private practice, to remember that your business expenses, it is, however, important then here to get a tax consultant involved and to maybe get somebody that to help you that's doing your books. Also, again, in conjunction with maybe some insight from your financial advisor, to look at what business expenses can you deduct from your taxable income. Why is it important not to skip your tax returns every year?
So first of all, if you don't file that tax return, you're not going to get a refund. I think that's the most important thing. If you don't log into your e-filing and you actually verify your IRP5 details, submit all of your tax certificates, claim back those deductions, you're not going to get that refund because it won't be due to you.
Yeah. So I've actually met a lot of clients that sometimes assume that it's automatically done because they pay tax. They see their pay slip coming in from government or coming in from the employer, and they see the tax is already deducted. So they would assume they're in good standing with SARS, but you still have to submit that annual return. And I think that's another thing is also you won't be able to perhaps borrow money.
Yeah, 100%. So we've seen that also in the past is if you're going to buy a property as an example and you apply for a mortgage bond, they would want to see that you've got a tax clearance certificate, that all of your taxes are up to date. Yeah. And we've also seen it. I think this would be a little bit more applicable to interns, especially first-year interns, where they have done some work in the past while they were still studying and earn an income, but they didn't necessarily pay taxes on that. So there's outstanding tax returns on that. So when you file that first tax return, you would see that they're not getting back the same amount of money which other people has received back, purely because there was an outstanding tax return. So it's important to keep those things up to date and to get that tax clearance certificate.
That's very true. I take myself as an example where I did a bit of VAC work when I was still studying, not knowing that, that was actually submitted and I actually had to pay tax on that income earned. So by the time I started physically being employed, I saw, well, I already had a tax number. I was actually already submitted. I was already, part of the system.
Yeah, you don't want to actually find this out when you apply for a bond to buy a property, and then you get disappointed because all of a sudden they tell you, listen, you've got outstanding taxes that needs to be paid, because that might end up you losing that property, and it might just discourage you.
Yeah. So I know normally tax season opens up in July. It normally closes in October, November, if I'm not mistaken. If you take longer than that, SARS can also impose a penalty. SARS can also impose a penalty. It obviously varies. It's not a fixed thing where I can say it's like 2,000 Rand or 5,000 Rand. It obviously depends. But they can basically employ.
Yeah, they're going to
impose a penalty.
There's definitely we've seen that also in the past, where people take too long to submit their tax returns, and those penalties then can go one or two sides. One side can go where you're not getting a refund that is actually due to you because all that refund is going to pay the penalty, or you have to pay into SARS to pay that penalty, and you also don't want to go there. And that's going to affect your certificate of good standing as well, which we can quickly speak to about.
I think something that's also important to notice, and we see there's quite a lot of doctors that's in government and that's leaving government into the private space, that then wants to use their government pension fund, maybe to put that money in a preservation fund or to move that money into a new retirement annuity. So they're basically then looking to access that money. There can also be a complication there if you're not in good standing in good standing with SARS.
Correct, because those transfers from a government employee pension fund to a retirement annuity fund of your own or a pension preservation fund is a tax-free transfer. There's no taxes on that, but you need to get a tax clearance certificate as well.
Yeah, a recognition of transfer.
Correct. So if you are not basically in good standing with SARS, you can't access that funds.
Can be highlighted.
You won't be able to transfer those funds.
Yeah. Specifically, if you then, let's say, go into a preservation fund and you want to access that money, you want to withdraw the money and use it for something, especially then in that instance.
Correct, 100%.
Any last thoughts from your side? Any last recommendations?
Yeah, so my advice would be is, first of all, if you don't have any knowledge on submitting your tax return, reach out to a tax practitioner or to a financial advisor that has got knowledge on submitting tax returns, where they can give you some sort of guidance. Be very careful just to do an automated return. We've seen it too often where people in their first year, because they are due to get that big rebate, they're all just by word of mouth. I think the word also spreads very quickly at the hospitals, where you find out, listen, I'm due for a nice rebate, where everybody just submit automated returns. And they don't actually have a good understanding of how to submit that return. And then it comes back to bite you a year or two later. So my advice would be, sit down with somebody that's got some knowledge and experience on submitting tax returns, get some guidance from them, and ensure that all of those things are compliant, because you don't want to sit with a situation in the future where you're going to get penalized.
Thanks, Vanner. Well, we hope you found this episode useful. If this is the very first time that you are listening to the channel, or if you're watching this video, please go to our channel on www.moneyandmedicine.co.za. We've got some frequently asked questions that you can have a look at. We also have nice videos where we have discussions, where we have panels, and talk to experts in the field to see what they have to say about certain topics. Also go to the bottom of this page and subscribe if you do find it useful, and share it with some of your colleagues that you also might think that they might find help in this. Until next time, plan the plan.